Good day, traders. Welcome to this week edition of Weekly Outlook. I want to take a look at some pairs and review them. But first and foremost, I have to review my activities for last week. I took just 3 or 4 trades last week. The first was Euro JPY. Okay, I took Euro JPY for a buy right from this level. Okay, right from this level, although I sent it straight to my signal channel and I ordered them to close it when it was not doing fine right here. But after this move down to the downside, I did catch this move to the upside. Okay, right now I'm expecting a corrective structure for more upside. Okay, I also took a sell on Euro GBP right here. Okay, see it right here. You have an impulse, although on the higher time frame it's still bullish, but I just had to catch this retracement. You have this 3-wave corrective structure, and you can see it moved down. Then correction, I took this for just 100 pips. Okay, so the analysis was simple. If you look at it very well, you will see that right here you have this equal top that was taken, this level was taken, and immediately flows down. And I always showed you this: anytime you have a consolidation and you have a move up and it flash down immediately, okay, any corrective structure is your trade to the downside. That same thing you see right here. See, break up, come down immediately, correction is your trade to the downside. And I did catch this for just 100 pips, guys, before it goes into consolidation. All right. I also took a card yen, that didn't do well at all. And I will tell you the reason why that trade did not do well. And it eventually hit loss. Okay, initially it hit about 50 pips profit. And at that time, everybody was sleeping. Nobody could take profit until it melted down. All right. What we're looking at in this pair is in higher time frame, like let's say 4 hours, for instance. We expected that this move to the downside should be corrected substantially, should be corrected to this level. And you see all the yen pair, they achieved that retracement to the required level, but only CAD, CAD did not retrace. And I will tell you the reason why CAD did not retrace. Okay, right here, what we were expecting was after this break of structure right here, correction here should give us this move to the upside for at least 1 to 3 or 1 to 4 risk to reward, but it did not do so. We're expecting this to happen, okay, up to like this level before the fall. If you look at Euro, JPY, all those JPY pairs, they achieve this appreciable correction to the upside, but CAD JPY did not do it. And I'm going to show you the reason why it did not make a move to the upside. The reason was simple. If you look at commitment of traders report, you will see that there are a lot of shorts on CAD. There were a lot of orders, from institutional perspective that was placed on CAD, okay? And even the longs were being closed and then short were being added to. So because of that, there was no liquidity for CAD to move, to push to the upside. And I will show you from here. Even when you look at the last report that was released on the 27th September, you see from this website, you see 27th September, you see a short, you have 51,000. First and foremost, you have non-commercial and you have commercial. So the one that is very important to us is this non-commercial. Okay, short, you have 51,000 plus, and long, you have 33,000. And you can see from the latest report that even 5,000 was added to short position, and then 14,000 was long position was closed. Can you see long position 14,000 was closed, and then a short position that was even higher before 5,000 was added. So there was no way that CAD will have strengthened in any little way. It has to weaken all through. This is the only reason why you see that CAD here did not give us the push. Otherwise, the analysis was cool. It was great. It was one of the best, even though it was counter trend. It was supposed to do well like some other yen pair, but CAD yen did not do well because of this singular reason. There were a lot of institutional orders for the short, for the sell of CAD. So it could not in any way find enough push to even make the right retracement before the push to the downside. So we've lost this, we've taken loss for the trade, and unfortunately, I sent this trade to my Signal channel, and they had to, get the loss. Okay, the same thing happened to CAD CHF. Remember that the reason why I focus on CAD was because there was going to be a GDP report that last week, and that GDP report was projected to be positive, and it was indeed positive. So, and when I found a positive setup, a setup that is bullish, okay, a setup that is bullish, I consider it good enough to take, because report on CAD, on CAD, the GDP was very, very good. But unfortunately, this pair was going to profit, coming out of profit until it just remained in a range. And here it is today. All right. It did not push to the upside. It remains in range. All right. So that's it about CAD. And you have seen the reason why it did not push. And you have also seen the reason why your technical analysis is not enough for you to make it in this market. You also need some knowledge of fundamental analysis and how the institutional players, how the big money movers are placing their order in the market. That can influence your directional bias. So I have just a handful of pairs to analyze for you today, starting from DXY. Of course, orders on USD right now is still very strong to the upside. There is no sign of a short in DXY, okay, right now, and you can see right here. You can see the structure right here is a sign that no liquidity was taken to the upside, and you can see why you are having this correction here. The market is correcting here because there was no injection. There was no redistribution here. Okay, there was no liquidity grab here at all. Okay, so based on that, I want DXY to correct to the downside, break market structure, then we'll get in to the upside. That's for DXY. I also want to consider EuroCAD. Of course, I released a video last week on my YouTube channel that we're going to have a bullish, EuroCAD. And of course, you can see this level broken. This is a typical liquidity grab, grab from the downside. Then you also see it when you see something like this, when you see a structure like this in an uptrend, you see a move down and immediately move up. Any corrective structure, guys, is your trade to the upside. And although I send this video and this setup to the group and to the channel, to the YouTube channel, but unfortunately, I did not take the trade. Why? Because if you take a fib of this structure from this level to this level, you can see it's 50. All right. So I was expecting it to come to like 61.8. That would have been the best place for me to take it. But the corrective structure ended at 50 and it ballooned to the upside. Can you see the powerful move to the upside? It's about how many pips? How many pips? That is 400 and it was 425 pips move to the upside. We miss it, but that is not a problem. But right now, of course, as I showed you that CAD is very weak. There is very massive sell-off of CAD right now in the market. Despite the strong GDP, that strong GDP or positive GDP report will not even save CAD because there are a lot of institutional order, for the short. Therefore, this week I'll be expecting a corrective structure for CAD, and after that corrective structure, more push to the upside. Okay, corrective structure, more push to the upside. Okay, the same way that I told you that there are a lot of order on a CAD for the short, the same way it is for the yen. Okay, yen is facing massive, sell-off right now from institutional perspective. Because of that, this Euro JPY, the structure is having, is very simple. You can see right from the top here, you see this level, it was taking, if this level that is taken to the upside, if it was a liquidity grab, then we expect this move to break this low, okay, before we look for correction to sell. But it didn't happen that way, guys. It didn't happen that way. Okay, for Euro JPY to start moving up without breaking any noticeable structure tells you that the upside is not done. And going by what's happening in fundamentals, there are a lot of, uh, bullish sentiment for Euro right now. So because of that, we have to have a bullish sentiment too for Euro JPY. So a lot of sell order for yen and a lot of buy order for Euro. So we're expecting a corrective structure right here for Euro that fit our strategy. Have correction, if you can have liquidity grab, impulse correction, we take the trade to the upside. That's another trade setup that I have for you on Euro JPY. Then you have another one is USD JPY, guys. On 4 hours time frame, USD JPY, you see exactly what's happening here. DXY is bullish at the moment, as I've showed you before. So if DXY is bullish, all right, if DXY is bullish, all right, expect UJ to make a move to the upside because the strength of USD is going to catapult, UJ to the upside. And especially now that you are having JPY facing a massive sell-off, just as you know that the Bank of Japan is making effort to sell off some of the reserve, to sell off some of the foreign reserve in its custody. That's what they want to do. So as they are selling off the foreign reserve, they are what? They are retrieving back the excess yen in the market. And as they do this, yen will continue to sell off, and then you have this other currency to be strengthening against it. So they are trying to see how they can make yen to gain strength. But right now, yen is still facing sell-off. So that's why UJ will make a move to the upside. And you can see from the technical perspective that we have a range here that is broken to the downside and immediately retrace. So this is just a very simple way to look at the chart. You have an impulse, you have correction, you have a market breakdown to demand to take an order and immediately move to the upside. So if you immediately move to the upside, breaking major structure, all you need is a corrective structure for more upside. It's as simple as that, guys. So that's what we are expecting here. You see after this range, the market break down to the downside and immediately retrace to the upside. So all we want to see is corrective structure. Once we see corrective structure here, then we look for internal break of structure, and from here you can look for a trade to the upside. Do this analysis this way will afford us, comfort in our trade setup because we are looking at this chart in the realm of both fundamental and technical. So that's the best way I think we should be looking at the chart. Then you also have a CAD, USD CAD. Okay, if you look at the USD CAD from, let's say, weekly time frame, you see how bullish it is, guys. Very bullish. Even monthly, look at monthly, look at monthly. Very solid bullish structure. Can you see the candlestick? Very bullish. All right, go to weekly time frame, look at it, very bullish. Okay, look at it on daily time frame. So all you need to see is, a retracement. You want to see a correction for you to take trade on a USD card to the upside. And of course, as I told you before, card is facing massive sell-off from institutional perspective, and then USD is very strong right now based on what we see from institutional perspective and DXY. So therefore, it is logical to look for USD card buy. Okay, USD card buy. So it will get the setup. Let's just go to 4 hours and you can see the corrective structure that we are beginning to have here. So if this is an impulse and you have 1, 2, and 3, if you can have another impulse that break this level, that will be a good way to look for a buy setup for USD card. Okay, want to see a move down first to break this low, and after we see internal break of structure, correction, and we'll take our trade to the upside right from this level. It's as simple as that. This is what I'm looking forward to, in the course of next weekend trading. All right, USD MXN, USD MXN. Okay, if you also look at this report for MXN, for instance, where is MXN, MXN, Mexican peso. If you look at the report for this, you will see that, look at it, for short, non-commercial short, 129,000, all right, and even the short that is 129,000, 4,000 is being added on this latest report released on the 27th. 4,000 is added, all right, and the short that is 87,000 plus, the long that is 87,000 plus, which is less than the short. That long self is being closed over 8,000, close to 9,000 of that long is being closed, and the short that is 29,000, 4,000 is being added. That means that in the coming session, MXN is going to be very weak. Okay, MXN is going to be very weak, and we have seen DXY dollar will be very strong. So therefore, I want to look for buy opportunity, buy opportunity in USD MXN. So, and the only way I can do that is if this the price can come to demand level. All right, if the price can come to demand level. So, and where's the demand level? Right here. Already here you have this top is being taken. You have break of market structure. So you want this to correct to the downside, and it can come by zigzag. Once it comes to this level, we want break of market structure, correction, and we have the trade to the upside to the next level. So if we look at it this way, you now see that fundamental, both fundamental analysis, technical analysis, and institutional order flow all agree together, and that is the only way we can take a trade that we can be confident in it. Okay, USD CHF, guys, I'm also having a bullish bias on USD CHF. Ordinarily, if you look at it this way, that this market is in a range, okay, if you are looking at it that it is in a range, you will not know what to do if you don't have access to how, institutions are placing their orders and so on and so forth. But if you look at it on higher time frame, you can see that these are corrective structure, 3 wave down, 3 waves up. Okay, ordinarily we should be looking for another wave down, but right now, when you are having a conflicting structure, you are having a Elliott wave structure that is conflicting, with the fundamental and the orders that institutions are placing. You have to be very careful, because it is most likely that it is you that is not getting the structure right. So based on that, based on fundamental and the technical that is before us, I want to see this. You see this level, anytime you see equal high like this, it shows that this move to the downside, guys, is not a real move that is going to go down to break structure. Let me repeat myself, all right? Anytime you see a market giving you equal high, just like, let me give you an example. Look at this level, guys. Look at this level here. I see equal high. When this one was coming, everybody who understands structure very well will know that this move to the downside will never break this structure, will never break this structural level without going back to break this top, because the market is creating, you know, a kind of liquidity for you to say, come back, come and take me, I'm still here. You know, the order you are supposed to take to move down very well, you have not taken it. Come back to me. That's what the market is saying. And you can see it right here. It has come. It has taken the order by breaking this level to the upside, but creating another way to say, I'm still here. You have not taken the order. That is why this move to the downside is not going to break this market structure. Therefore, you just have to look for correction to demand. Of course, you know, if you are buying, if you see an impulse, you see this level, there are 3 levels here, guys. You have a premium, you have premium level or premium price, you have equilibrium price here, you have a discount. You have this discounted price. Between this equilibrium and the support here, you have the discount. Between this equilibrium and the resistance here, you have the premium. So if you want to buy, you cannot buy between equilibrium and resistance. You can't buy. Okay, this is the only region where there is discount in this market, from the support here right to the equilibrium. Any area below it is the discounted price, and that is why 61.8 is termed as a golden ratio, because 61.8 fib retracement of this impulse is going to give you a discount. Can you see? It's going to give you a discount. This equilibrium below it is 61.8. That's already a discount, a discounted price. 78 is already a discounted price. So any retracement below 50% retracement for a buy is ideal to take. So the same thing we want to do right here, guys. The same thing we want to do, since we are still expecting upside for USD CHF because of the strength in dollar. We will expect that this corrective structure will break down. If you can break down to this demand level, take liquidity. Any impulse here, once it's corrected, it's our trade, guys, to the upside to target the next structural level. Last but not the least is Audi card, guys. Audi card. Okay, this Audi card, I'm expecting it to buy to the upside. And if you look at it from H4, let's say daily. If you look at Audi card from daily perspective, you will see that it's not particularly fantastic in its way to the upside. I want to look at it this way. You can see this level not taken yet. You see this level? When this one was coming down, what was in your mind? You are now in a downtrend, right? You're now in a downtrend, but the market is telling you that something is here that is particularly important that you must come and take. Okay? And the market did not go down until it came back to take this level to the upside. Can you see? Take this level to the upside. The same thing is repeating itself here, guys. This market will not move conveniently to the downside until it takes this level that is created for it. You know, you see this? This is ending structure, like this market is going to go up and break this level before it will now move down. That is what we are expecting, and this line of thought is in line with the current fundamentals and the order, the sell order on card. There is too much short placed right now on card. So if there is too much, short on card, and long is being added to AUD, so it is logical to look for AUD card buy. All right. So, and in looking for buy opportunity right here, we get to go back to smaller time frame and see what the structure is saying. So if you look at, let me delete some. If you look at this smaller time frame, you see that right here, it's possible that when market open Monday, Tuesday, this one could break down, this one could break down, okay? And then after this low is taken, you might see a push up to break market structure. Correction to discount is your trade to the upside. And where is the TP, the possible TP, guys? Possible TP of this pair might be when this high is taken. Okay, this high is taken. And what I do is to project psychological level, the next psychological level just above that equal high. Okay, just above that equal high. This is the equal high. I look for the next psychological level, 91 or 92. Okay, I'll just project this TP this way. the market would like to come to this level, and when it gets there, we'll see the next structure that will create. It can come to this level and now create, a correction, a push up and a push down. So the next correction will be your trade to the downside. Can I show you example and proof of such a structure? Yes. Can you see after this corrective structure, you make a move down? Can you see a push down? Any corrective structure here is your trade. That's how market moves, guy, and that's how you need to follow it. So that's just a few review of some of the pairs I'll be looking at in the course of the week. I'm sorry, this video is not made participatory. I didn't send the link for people to join because I have a lot of things doing, and I don't want to skip this week in providing this brief analysis for you. That's why I just have to quickly do the video so that you can get to feel what I'm looking at, and the trade that I missed last week and why I missed them, and how I am adjusting myself and how I want to reposition myself to catch the big move this week. All right, so if you find this video very instructive, just put down your comment. If there's anything you don't understand and you want me to buttress on some of those points, I encourage you to also write it on the comment section so that I can go through them. I encourage you to also like this video, share it, and also subscribe if you have not done so. If you have subscribed to the channel and you always comment, I want to appreciate you. And I know a day is coming that I will give you a lot of goodies for your good work. Thank you very much. See you next time. Bye.